Hello, everybody. My name's Kyle Johnson, Principal KMJ Real Estate Group, Inc. This presentation is going to do a complete market analysis on the Montgomery County commercial real estate market, specifically as it relates to our Lake Forest Mall site in Gaithersburg, Maryland. With this study, we had a few key goals in mind. Obviously, we're going to take a look at sort of a micro and macroeconomic picture. We look at social and political conditions and other market forces that might impact commercial real estate. We sort of start by looking at the MSA as a whole and the greater DC suburban metro, and then we do look to whittle down to sort of a submarket level and even a local neighborhood level within the Gaithersburg Lake Forest Mall trade boundaries that we establish. Our goal here is to identify and sort of highlight key supply and demand drivers that would impact various asset classes of real estate. Specifically, we look at the viability of an office development, residential, retail, and we even explore some mixed-use scenarios toward the end of the case study. Finally, KMJ Real Estate Group, Inc. will make our determination. We will recommend to our client what we believe the highest and best use for the Lake Forest Mall development site should be. Keep in mind that our determination is purely based on market signals and what the market data is telling us would be the most viable option, and not necessarily based on any particular investor's appetite for risk or return, proposed IRR, debt structure, capital stack, etc. We're purely looking at market data and using that market data to come to a conclusion on what might the highest and best use look like. So before we can start to venture out and look at various supply and demand and market area, it's very important that we nail down the salient facts and specifics to our Lake Forest Mall site. The chart here gives some of those specifics, such as the current use, the site acreage, the parking count. The site is currently owned by 5 Mile Capital Partners, as well as some general operating expense, percentage leased, net rentable area, etc. These are important when analyzing any viability, but figured we'd just highlight these for our viewers before we move forward and get into the nuts and bolts of our market analysis. Moving on to sort of a quick look at the topography and land analysis of the current Lake Forest Mall site, there are a few things that we wanted to highlight that will impact our conclusions in terms of our highest and best use. The site is fully improved as it sits, and it sits atop a small plateau. This is important because from a retail perspective, your parking and your main retail improvements are going to be up above street level, which is going to make sort of drive-by visibility slightly less than some of the big box anchored, perfectly flat developments that are adjacent to our site. The property is fully improved with buildings, hardscapes, landscaping. We are directly visible, though, from public streets in terms of signage, but the buildings themselves, as I mentioned, are sort of up on this plateau. The other thing with the topography that's worth mentioning is directly adjacent to the site are a number of what appear to be drainage basins and drainage storm drain type of basins. They're directly contiguous with the public streets and our site specifically. And the current development is a regional mall, the largest regional mall in Gaithersburg. However, it's older. It's a 1980s vintage, and it doesn't quite fit with today's demographic and sort of the consumer sentiment that exists in today's retail. So the next couple slides are some maps that we put together to show sort of drive time as well as our market trade areas. Now I know they're kind of difficult to see. I encourage you to download the PowerPoint presentation so you could potentially zoom in. But the red line outlines what we consider to be our primary market area, our primary trade area, with the orange line being our secondary. Our research found that there's quite a difference between East and West Gaithersburg, both in terms of average household income, demographics, spending habits, etc. So for the most part, we used the Interstate 270 as our dividing line for our primary area. We did include the governmental facilities located south of the property and just east of I-270. In our primary area because we do feel that the employees in those areas and the incomes that are generated from those areas would be a demand driver for our site. And the orange area represents our secondary market boundary, which is essentially most of Gaithersburg and some of the surrounding master plan communities. This map shows a 10-minute drive time boundaries from our site. As you can see, we're close freeway access to 270 and Interstate 370. This kind of just gives our audience and our client a decent idea of where folks can get to and from within a 10-minute radius. And again, this is sort of mirrors our overarching secondary demand trade lines. Now on slide 6, that's 2 slides back on our map within our primary trade boundary, we've highlighted some key points of interest and some key developments that we feel would be solid demand generators for our primary trade area and our Lake Forest site. And these are summarized here. Number 1 and 2 are some fairly dense apartment communities that would surely house some retail shoppers and prove to have some retail demand. Montgomery Village is a mixed-use development with public green space as well. Our site is close to various public schools within the Gaithersburg public school system. And then we also looked at some major employers, Hughes Network Systems, Holy Cross Hospital, and the National Institute of Standards and Tech. This is a federal government facility that provides some major employment for the area. Lastly, our site is not directly adjacent to any public transit hubs. There is the Gaithersburg bus system that runs throughout the city. The Shady Grove Public Transit Station is south of the property, still within that 10-minute drive time, but not directly within walking distance. And there the buses converge, and there's also a heavy rail system that runs south down the I-270 corridor into Bethesda and other DC suburban areas. Other key neighborhood highlights, as we mentioned, their location is considered a part of the I-270 corridor. We also have close access to Interstate 370 running east. Our Lake Forest Mall site is directly adjacent to big box retail, and there seems to be a large number of big box anchored retail centers within a 5-minute drive in every direction of the subject. According to neighborhoodscout.com, the crime rate in Gaithersburg is 1.48 for 1,000. That's fairly good. That's in line with the suburban DC metro, with the greater MSA. What is notable and worth mentioning is the northeast section of the city, which is where our subject is located, offers even lower crime rates and lower crime rate than the rest of the city, which could be beneficial when it comes to a residential development. The other thing to look at and highlight is the average home price within the city is $370,000. That's the median price throughout the entire city of Gaithersburg, and as mentioned, there seems to be a bit of a dichotomy between west and east. On the northeast side of the city, where our subject's located, home prices can easily exceed 400,000. This is significant because while you'll see in later slides the household income is fairly robust and fairly strong, with an average home price of 400,000, that's quite a large down payment that most folks have to save for, which could further support residential multifamily development. It's also important to highlight some of the major employers in the area for two reasons. This is where a lot of the spending power comes from in terms of retail. But also, if you have a robust employment centers, you'll generally have robust residential to follow. As mentioned, the National Institute of Standards and Technology is a federal facility funded by the Department of Commerce. That's the largest employer in the area. There's also a fairly robust medical science industry. We have a few, research labs and such that house a couple thousand employees. Lockheed Martin's also present in the area, large defense contractor, huge network systems, as we mentioned, as well as other healthcare-related industries. Now that we have a decent picture of our Lake Forest Mall site specifically, as well as the surrounding area, we're going to dive into our various asset class market analysis reports, starting off with looking at the viability of an office development for the project. The key demand driver for office real estate is job growth and how job growth is going to impact the need for office space. And the Gaithersburg, Maryland job growth picture is subpar at best. Per Sitewise, the population growth is very small, less than 5,000 new residents by 2020, and the region is not easily connected to DC by mass transit as other suburban locations such as McLean, Virginia. Other factors that are impacting job growth in the area: the federal deficit, change in political power, the shift in Congress, now a GOP-controlled House, Senate, and presidency, and we expect the federal government to cut spending under GOP control. And given that the largest employer in the area is funded by the Department of Commerce, that could negatively impact office space in the area. Gaithersburg reports recent job growth at just 1.29%. That's slower than the national average at 1.59 and far slower than other suburban DC regions. The household income in the city is estimated to be $78,000 and change, which is again a little low for the DC metro. The average annual household income when looking at the DC suburban DC rather metro as a whole is $114,000. Sticking with our office analysis, this slide has a couple of charts that show absorption in Montgomery County versus other suburban Washington, D.C. counties in the area. As you can see, absorption is not as robust as some of the others. Figure 10 is the total absorption since 2008. And while we're not negative like some of the other counties, we are still falling behind and still falling short. So based on all of our data and all of our research, we believe the Montgomery County office market is oversupplied with older and less desirable product. While there are opportunities to bring on new office product into the market that fits employers' needs, and while there may be an opportunity to convert and renovate existing inventory to capture new demand, with the planned projects and also sort of a lackluster employment picture, as well as the slower absorption rates, we would not recommend an office development at this time. Moving on, the next segment in our report is going to cover the viability of a residential property at the Lake Forest Mall site. When trying to assess the viability of a residential development, it's also important to look at the submarket demographics. The chart below, again, I know it's kind of hard to see, but the full chart is available in our Word document download. The chart below shows a breakout of the population in terms of age and in terms of male and female. The primary trade area reports an expected population by age, residents between 25 and 34 making up the largest segment in the population at 16, almost 17%. Overall, nearly 47% of residents are between 25 and 44. This is significant because this age cohort is primarily the age group for home ownership, first-time home ownership, and the median age in the city, in the primary trade area, is a little over 35 years old. So again, these demographics and these age cohorts and the concentration of population within that home ownership range might signal to the market that there is a strong demand for housing in the area. Some more data points to look at, again, to highlight is the average home price. In Gaithersburg, it's a little over $370,000. Again, in the northeastern section of the city, prices exceed $400,000 very easily. Germantown, which is the neighboring town, the average home price is less at $300,000. The area median income, or AMI, per REIS is just under $53,000 per capita and $115,000 per household. Now, Sitewise reports different average household incomes of just under $100,000. So it's important to realize that each data provider calculates its averages in its own way based on its own sample size, etc. But looking at these two data sources, you can clearly see that the average household income is at or above $100,000. That's significant because while that's a decent household income to live off of, given the high home price in the area, that may not be a large enough household income to set aside decent savings each month to afford a 20% down payment, which again could signal strong demand for a multifamily type apartment community. The other data to look at is the daytime population. Gaithersburg has historically been a commuter city, and that's evident by the daytime population versus the resident population. Nearly half of all of working-aged Gaithersburg residents commute out on any given workday. Simply put, Gaithersburg workers are willing to commute down I-70 into more robust economic areas for work and then commute home to live in Gaithersburg. Unemployment rate is 4.1%, which is pretty good. And then the other thing to look at is the households. And 44% of the households within the primary trade area of the Lake Forest Mall site, so almost half, are dual-parent households. This is significant because it's, historically speaking, now not trying to be politically incorrect, but historically speaking, dual-parent households will often have children. And dual-parent households and family settings usually indicate a strong demand for single-family style of housing. Multiple bedrooms, multiple bathrooms. Now, it's important to know that this does not necessarily indicate a demand for fee-simple single-family housing. Again, with the income numbers the way they are and the average home price the way they are, KMJ Realty Group is by no means suggesting that a developer go out and do a large-scale subdivision of 3-bedroom, 2-bath, single-family homes. That sort of pre-recession era thinking isn't the best use for the development site. Now, narrowing down our residential market analysis to multifamily and apartment-style living, it's important to look at both the vacancy by property age and also the inventory by property age. As seen in the two charts below, Gaithersburg has very tight vacancy numbers, sub 5%, for any properties built in the any property built before 2000, with the older style properties, older vintage assets showing the lowest vacancy in the tightest market. This is primarily due to some very Class A apartment communities that have come online in recent years that have driven up the circa 2009 or later aged assets to a higher vacancy rate. The other chart shows inventory by building age, and as you can see, there's a glut of inventory that was built between 1970 and 1990. And over 50% of the inventory in the submarket is within that age range. What is surprising is 11% of the inventory was built after 2009, which again shows a little bit of a glut in the highest end Class A apartment communities. This chart shows a correlation between construction, vacancy, and absorption from 2014 to 2015. As you can see, in August of 2015, there was quite a bit of new inventory coming online. Absorption was sharp in August of 2015 and then fell off toward the end of the year. This is driven by two reasons. Number one, again, the type of assets that were constructed are all high-end Class A apartment communities, but still your typical walk-up or garden-style type of projects. Not any sort of standalone townhome or even a sort of single-family residential type of rental communities. And then also, just looking at historical trends, the absorption is slower during the winter months. There is some winter seasonality that goes along with that, and with that lower absorption, you've seen vacancy rates rise, tick up slightly because of that new inventory and because of that seasonality. We feel that there is an oversupply of the uber Class A product, but there is an opportunity, given the demand factors, to still build multifamily in a sensible way that's still very profitable and could fit in very well in the neighborhood. So looking at the residential data that we've presented here, we do see opportunity in the residential market, but only if it's done in a certain way. The steady population suggests there is a stable demand for housing in the area. While the vacancy has increased, the rate of rental rates and home values have outpaced the vacancy rate, suggesting a fairly healthy market. The absorption rates do look a little scary on the surface, but what we've seen is those negative absorption rates really are only a month or two after a new project comes online. And that's somewhat expected. You get a new 400 unit uber Class A property online, absorption tanks for a couple of months. Once it's leased up, everything's back to normal. While there are numerous market rate garden style rentals and a lot of single family residential in the area, we like the idea of a term that we've coined called hybrid housing. Loosely defined, we like the idea of building rental units that could double as sale units at some point. Specifically, we believe building a sort of standalone community of residential townhomes with garages on the first floor and maybe 1 or 2 stories of housing above. Again, ideally, individual buildings per units that are condo mapped would be very well received in the markets. You'd have families that would love to live there because of the space and who can't afford the down payment on a single family, fee simple house. And at the same time, as incomes grow and as the market continues to improve, these sorts of units would be ideal candidates to sell as condos down the line. Future housing demand will derive from the expanding I-270 corridor, the University of Shady Grove area, Montgomery College, and other areas will all prove to have decent housing demand. While some developers will be scared away from the Montgomery County housing market because of that Class A and because of that negative absorption, we believe that that's an opportunity to come in and build the right multifamily housing project that might double as a single-family condominium project later on. We feel that is a niche that is untapped within the market. Finally, we're going to take a step back and look at the Lake Forest Mall site in terms of the viability of a retail development. This chart looks at the existing retail demand. It's expressed in terms of aggregate sales per household in 2015 and 2020 as a percentage of total spending. As you can see, the majority of income is spent on non-retail purchases such as savings, housing, childcare, and other expenses. Within the retail arena, we've broken out various types of retail, from food purchases to be prepared at home, such as grocery stores, food away from home, such as restaurants, personal care, furniture, appliances, etc. Most of this data came out as expected, with grocery purchases making up the largest percentage of retail spending. But what was exciting and what was worth highlighting is how some of these luxury percentages are set to increase between now and 2020. Specifically, you'll see personal care expenses increasing and apparel expenses increasing. This is a sign of an improving economy and would show strong demand for specialty type of retail and more luxury items in the future. Taking a quick snapshot of retail spending on a per household level as of 2015, total retail buying power is estimated to be $63,000 and change per household per year. Retail spending is expected to grow slightly, around 1.7%. Annually by 2020. In the next few slides, we look to uncover the total amount of retail space supportable on a square footage basis for the various retail categories using the computation below. For the purposes of this analysis and to keep things static, we've used a capture rate of 33 1/3 for all retail categories. Sales per square foot have been estimated at $400 per foot for grocery purchases. That would be food to be prepared at home, and $350 per square foot for all other retail categories. Using the calculations on the previous slide, we've went ahead and put together this chart that shows the 2015 supportable retail and the 2020 projected supportable retail for the various categories and added up as an aggregate total. The projected supportable retail is expected to increase by 2020, which is a good sign. Grocery store retail space seems to be in most supportable, which is expected given the household formations and given the average age cohorts in the area. What is exciting is that apparel space and restaurant space are second and third in the highest demand. This again fits into the narrative that people want more experience-driven retail outings and not so much, your big box Walmarts of the world or your large Best Buy. They want more of an experience-driven retail brick-and-mortar environment. Outdoor shopping malls, mixed-use shopping with retail, restaurants, maybe a movie theater, things in that nature. Based on our retail calculations as well as third-party reports such as CoStar, we do see some opportunity in the retail arena. But again, just like the residential, it has to be done right. Within the immediate trade area, there is a saturation of large, big box anchored shopping centers and sort of neighborhood centers. This is very evident just in driving the area, as well as the fact that Lake Forest Mall is the only major mall in the surrounding area. This, though, coupled with sort of an unmet demand for restaurants and an increasing demand by 2020 for sort of luxury and experience-based retail, suggests that an open-air mall or a mixed-use development would be well received. Gone are the days of the large mega mall with 5 floors of shopping in a closed, stuffy, but air-conditioned space. Today's consumer is looking more for that experience, so a smaller outdoor shopping center with maybe some large anchor tenants, but mostly more boutique-style retailers would be well received in the market. The recommended development size, in our opinion, should be less than the existing 580,000 square foot Lake Forest Mall development. Ideally, to ensure a thriving development and low vacancy, as well as a development that's supported by the neighboring residential and projected and recommended residential setting, no more than 400,000 square foot would be recommended. Now, for the moment we've all sort of been waiting for, we're going to conclude by providing our recommendation for the highest and best use for the Lake Forest Mall development site. First and foremost, we do not see any large benefit or large opportunity in the office arena. We see a glut of office space. We see a disconnect between what office users want and what inventory is available, and that imbalance is not going to be immediately corrected, which makes constructing new office space, even under the right uses, not attractive, especially given the slow job growth and sort of lackluster employment picture within the city limits of Gaithersburg. Where we do see opportunity is in the residential and retail arenas, again, if done correctly. Based on the available data, based on our math and our supply and demand trends, along with population demographics within the primary trade area, we believe that a master-planned mixed-use development that consists of multifamily and an outdoor retail component combined would make up the highest and best use for the subject property. Specifically, we believe that a freestanding sort of townhome-style residential component with ground floor garages along with 2 and 3 bedroom units would be very attractive and well received in the market, even given the uber class A glut that's online and the periods of negative absorption. We believe this sort of multifamily use would be well received given the age cohorts in the area, the average household income, and the average household size. We believe that Gaithersburg will continue to be sort of a hub for families. Expanding on the size and scope of our proposed highest and best use, the residential component should be completed with condominium-like finishes, and the property should be condo mapped. This will give an investor multiple exits and a loan basis should market dictate. However, to not compete with the uber class A product that's up in recent years, we're by no means advocating for such things as full granite countertops or wood flooring, crown molding, etc. What we're really advocating for is a plus workforce style of housing that would be attractive not only to a renter but a first-time home buyer. This highest and best use for the residential is recommended based primarily on the saturation of your traditional garden style apartments in the area, as well as the demographics and the population. The 24 to 44 would again suggest that home ownership sort of arena would be a possibility in the future. Shifting now to our retail component, it's very important that the retail does not compete directly with the big box anchored centers in the immediate area. In fact, Lake Forest Mall is the only regional mall in the area, but it's just not quite up to the needs and wants of existing consumers. As we mentioned, gone are the days of the super regional indoor mega mall. Lake Forest Mall, along with all the other retail within the trade area, accounts for almost 8 million square feet, which is fairly large for a mid-sized suburban town like Gaithersburg. So we're proposing a much smaller 300 to 350 square foot development site that focuses on that experience. Now, don't get me wrong, we can larger unit sizes to attract something like a Nordstrom's Rack or a Macy's or something like that. But it really should, the core of it should be smaller retail units that are occupied by more niche retailers that sell apparel, that sell luxury items, that sell food and restaurants, things of that nature, that again makes it, instead of a shopping destination, more of a meeting and congregation destination. Thank you very much for listening to our presentation on the Montgomery County and Gaithersburg commercial real estate market. We hope you found it informative. Please see the following 2 slides for our references. And again, I encourage you to download both the PowerPoint slide deck of this presentation as well as the Word document attached, which is our full and complete market analysis report. Thank you.